How can you tell if the stock that you are investing in, or maybe you have a position in, is done, right? And that's what we're talking about tonight. And we have tonight on our little Jazz After Dark, our good friend Buffalo Trace, right? Actually, I don't know where that came from. I just happened to see it on there, and I said, "Well, I like Buffalo Trace." By the way, if you make an old fashioned with Buffalo Trace, you'll thank me. Let me know in the comments section. Anyways, okay, here's what we want to know. A lot of our clients actually have, we invest for them, their Roth IRAs and 401ks and stuff, and we handle all of that long-term stuff. And occasionally what happens is somebody says, well, I've owned Ford for a long time and I'd like to keep it. I've owned Verizon or Tesla or whatever. Well, inevitably what happens is there's a great run in that stock, and maybe everybody gets excited about it for some reason. And they say, well, hey, should I sell it now? How do we determine if a stock's run is about over, at least in the short term, or maybe it's gone too far? Well, we're going to use an example from our office trades. If you don't know, jazzwealth.com/research, you can join, and I actually share all the trades that I'm doing on a daily basis, and it looks something like this, where you can see the P&Ls and sizes and blah, blah, blah. You can play along with all of it. We don't just say, oh, we bought a stock and hope that you follow along. It's really about education. We use a lot of options, as you can see. And so maybe you'll consider joining. It's $13.99 a month, and all the proceeds actually go to Drum Corps International, something that I'm very, very passionate about. All right. So here's an example. The ticker symbol is MicroStrategy. Now, I still have one of the calls left. 760 call out in December. Now, if you're not one of our members, what's happened was, well, you could see MicroStrategy took off, right? This is a company that has nothing to do with Bitcoin, but they've decided they're going to sell their own stock, actually convert some of their notes into stock and then sell the stock so that they can use the money, $2.5 billion worth of it, to buy Bitcoin. They believe in it. And I don't know if they're right or wrong. It doesn't really matter to me. But I know that what happened was this stock took off really crazily. So much so that we actually have a client that when it was around like 460, 470 said, just buy it. I want in. And we kind of fought about it, right? I was like, hey, no, I'm not going to chase it for you. And he was a little upset. So then it went up a little bit more, and I'm like, hey, just so you know, I'm actually going to short it. I'm going to bet on it going down. That's how strongly I believe in this. And if I'm right, I'll buy you a steak dinner. We'll go have a good, he's in Tampa. So I'm like, we'll go have a good time. If you're right, then I'll make up the difference. I will give you the difference between when you told me to buy it and when it actually goes up to some number you would sell it. That's how confident I was. Nonetheless, it was my biggest one single stock profit for the year in my own personal account. So I'm not complaining. And actually the 760 call is doing okay. It'll get better, but that's where we stand. So how do we know that this meteoric rise is about done? Do you go buy the stock now and hope that it goes up higher? Or do you, will other people join you is what I'm trying to say. Well, there's a couple things that we can do to tell this. Number one, the stock went way too far, too fast. It is not normal for anything that has a value to see an appreciation of that value in such a short amount of time. You get what I'm saying? Give you a couple examples. Your GameStop, AMC, pot stocks, the fake meat stocks. Remember when it was like, oh, it's plant-based meat and we're all going to eat it and it's going to be great. Yeah, it's all right, right? But it doesn't mean the stock is worth so much. Bitcoin has done that from time to time where it's taken off. 3D printing stocks, all those hype stocks, right? You go, well, they just take off. That appreciation so fast in such a short amount of time, well, it's not possible. Homes back in 2000 and, 6, 7, things like that, right? Some of the COVID stocks, Zoom, remember Zoom, the meeting company, how it took off over COVID. Oh, we're so excited. So the appreciation can't continue. So step number one is you go, well, I own a stock that normally trades at, look, this is a nice, normal trending stock, but all of a sudden it's got wildly out of control. That's number one, how you can tell your stock is about done, and you might want to participate in taking some profits if you have the stock. The second thing is a little more geeky. See this thing down here at the bottom? What I'm doing here is yeah, you can see it. In the light gray, in the very background, that's the price of the stock. In the more prominent, like white line that you see, this is the volatility. Now, this gets into options a little bit. We don't have to do this tonight, but this shows the stock's volatility relative to its history. So we're looking back and we're saying, well, it's 11.8 right now. This was a pretty interesting spike in here, 7.8, 10.3, got kind of high. All right, fine. What we're doing is we're saying, how high is the implied volatility of the stock relative to its history? Would you say it's high relative to its rough average here? Or is it low or whatever? No, it's incredibly high. It got up to almost 14%, right? Maybe even touched 14. Not quite. So the second reason that you can see that a stock is about done is, look, the volatility today got sucked out of the stock, falling 2% almost in one day. Why would volatility go lower in one day? Because there's less participants that feel that that stock is going to continue going crazy to the upside. So that's an indication, right? So step number one is we've appreciated so fast, this can't continue. Step number two is, well, people are less worried about it going up. And in fact, I shouldn't say worried. They are placing less bets, right? Volatility is based on the actual events that are taking place. So there are less people betting that this thing is going to skyrocket to $1,000 or something. So we've sucked the volatility out. We know now that there's less participants. You get what I'm saying? If there are less participants in a stock, do you want to be a participant, right? It obviously had its amazing run because everybody was excited. Whether they're right or wrong over time, we'll find out. I'm not saying people are bad for buying it at 450. Right now, they're just temporarily wrong. So that's the second thing, that volatility, less participants. I'm not sure. I mean, maybe Weller, but I'm not sure there's anything better. All right. So we've got two reasons. We got two things to look at: a stock going up too far, too fast, and then the volatility dropping really out of nowhere. Why is that doing that? Okay, so what's the third thing? Well, this is a little tricky to spot, but if you have what's known as a portfolio margin account, okay, so there's a cash account where whatever cash you have, you can use to buy stocks and options and futures or whatever you want to do. And then there's a margin account, which is essentially one for one. Not everybody's for it, that's fine. But if you put in $10, they'll let you use $10 to buy, whatever you want to buy. Then there's something called portfolio margin, which is a risk-based margining system. This is not meant for the average folk out there. You might want to have a little experience what you're doing before you decide to participate in this. You also usually have to have a larger account size. So what this does is it says, we're only going to require the margin to put up based on the risk. So instead of saying, well, you put up 10, we'll put up 10, it's a 50-50 split. They say, well, if you're buying, let's say like the S&P, right? And you want to use some money to do that, well, there's a high probability that the S&P is not going to go to zero. So we're not going to ask you to put up 50%. They'll ask you to put up like 15% of your money and they'll float the rest of it. So you can see how that could get out of hand, right? You definitely don't want to not know what you're doing if you participate. Well, anyways, when you look at something like MicroStrategy, the margin on a normal stock would average out to about 17%, meaning you would put up 17%. You have to maintain 17% of your money. The rest would be margin, and then you're free to use the rest of your money to do whatever you want. Well, the margin on MicroStrategy during all of this chaos was 39%, right? Because the brokerage firm knows there's an increased amount of risk here. They know that this is not going to continue forever. And so if you choose to buy it or play along in some way on the long side, they go, we know you're going to get in a little bit of trouble, so we're going to require that you put up more of your money. It's a dead giveaway. So the margin on this got up to 39%. Which means they would normally take 15 to 16%, somewhere in there, of your money and put up the rest. And instead they're going, no, more than double that because we know there's going to be troubles ahead. So you have those three things that help you determine, not to say they're the only things, but three things that give you a really clear sign that your stock is getting out of control. You have that climactic, or some people call it a parabolic move, the hockey stick looking move to the upside. You have implied volatility dropping, meaning less people believe that this fund is going to continue. And then you have the brokerage accounts themselves telling you, we see the risk. Whether you do or not, we're asking you to put more of your money up, into the whatever the trade is. So I just want to point that out. A little something different there to look at relative to like our retirement talk and all of that stuff. And if you don't know, we call this Jazz After Dark. This is more of a hangout. I'm not trying to like talk for 3 minutes and then get out of the way. And we usually enjoy a little bit of some different kind of bourbon, or lately some different types of scotches as well. Now, if you want, you don't have to. Nobody's forced to do. Clients get it for free. If you're one of our clients here, you just go in there, you'll see our research site. But if you want to participate and see all of the individual trading type stuff, that's at jazzwealth.com/research. I go through the good, the bad, and the ugly, and I don't hide anything. So if, for example, one of my tricky positions right now is United Airlines. So we show you the strategy. How do we deal with a loser, and how do we fight our way out of it and see what to do? And you get to watch in basically real time as it happens, instead of just saying, buy that stock, buy that stock. It's not a stock recommendation service, but really just some trades that we've got going on around the office, and it's been going really well. So we'll see how that continues. All right. Hope that helped in some way. I promise you something that you do not see on YouTube, where people go, look, there's more to investing than just going, it's going up, let's buy the stock. So I want to try to give you some of those extra layers, a little bit extra knowledge there, and hopefully it makes you some dough. In the meantime, you keep your dough straight out there. Check us out at jazzwealth.com, and thank you for watching, subscribing, and hitting that thumbs up button at the same time, See ya.